Taiwan Semiconductor and Broadcom are two companies benefiting from the rising effectiveness of artificial intelligence. So investors that are interested in that tailwind are looking at these two semiconductor stocks and trying to decide which one is the better stock to buy for long-term investors. I'll answer that question in this video, comparing these two AI companies across several important financial metrics, including looking at their revenue growth history, looking at their profit margins and cash flow from operations, also evaluating the returns on investor capital. Finally, I'll look at valuation by sharing with you my proprietary discounted cash flow valuation models I created for both Broadcom and Taiwan Semiconductor. And then I'll look at valuation on a forward price to earnings basis as well. I'll bring that all together to answer the question of which one is the better stock to buy right now.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Looking at the revenue growth history for the last decade, we see similar patterns for both Broadcom and Taiwan Semiconductor Manufacturing, with Taiwan Semiconductor Manufacturing having the edge in revenue growth since 2020. And I suspect that will be the case going forward as Taiwan Semiconductor is increasing its manufacturing capacity, not only in Taiwan, but also in regions like Japan and the United States, because demand for its services is expanding so quickly. If you didn't already know, Taiwan Semiconductor is the manufacturer for NVIDIA, which is experiencing booming demand for its AI chips. Taiwan Semiconductor also is the manufacturer for Apple and AMD. So its customers are thriving, and so Taiwan Semiconductor is increasing capacity because NVIDIA is sold out and it says it can't keep up with demand for its products. So that's great news there. Meanwhile, Broadcom's recent acquisition of VMware is helping the company by adding all of VMware's revenue to its own total. Also, Broadcom's management team is confident that it'll be able to cross-sell products because of the relationship and its customers and the customers of VMware. So Broadcom's revenue growth prospects also look strong. The company delivered 24.7% in the most recent quarter. Looking at the operating profit margins, two things stand out to me. First is that these companies are incredibly profitable on the bottom line, and that they're increasing their profit margins over time, which demonstrates economies in scale. Taiwan Semiconductor is arguably the best manufacturing company in the world, bar none, regardless of category, right? Taiwan Semiconductor is manufacturing semiconductors, but even if you compare them with car manufacturers, any manufacturer, I've scarcely seen a business that generates the types of margins that Taiwan Semiconductor does. Broadcom, too, has been a very profitable company, and it's made acquisitions smartly and prudently. It hasn't overpaid for acquisitions. Management said that once it has some time to digest the acquisition of VMware, identify synergies, optimize the performance, it will recover its operating profit margins back to peak levels here around 40-45%. And given its track record, it's reasonably safe to, well, I shouldn't say safe, but I would say it's reasonable to assume that management is correct in believing that it will increase its profit margins back to those peak levels as it has time to digest the acquisition. And some of the ways where an acquisition adds to profitability of the company include removing redundancies, right? So if VMware had its own marketing department, its own finance department, its own management team, its own legal team, its own marketing team, you don't need duplicate teams in all those categories. So you can bring the teams together, identify the top performers, and combine those two departments and optimize. And unfortunately, you might have to let go of some people because you don't want redundancies in the business, but there's lots of duplicate categories that you can eliminate when you combine two businesses, and thereby make the two businesses more profitable than they would be separately. And so that's the one way that Broadcom can recover those margins that are initially lost when you make an acquisition. So looking at the returns on investor capital, we see similar trends, improvements over time, and really good numbers here. Taiwan Semiconductor at 25% is better than Broadcom at 7%. But again, for the same reasons I just talked about for the operating margins, it's reasonable to assume that Broadcom's ROIC will recover back to peak levels of around 20-25%. So now let's look at valuations. Broadcom, when I conducted my discounted cash flow valuation, I found its intrinsic value per share to be worth $175, and the current market price is $189. The discount rate I applied for Broadcom was 11%. When I conducted my discounted cash flow valuation for Taiwan Semiconductor, which I updated on March 7th, I found the intrinsic value per share to be $154. The current market price is $173. The discount rate I applied for Taiwan Semiconductor was 14.73% to account for the greater riskiness of this business for a couple of reasons. Number one, the increased capital intensity required for Taiwan Semiconductor. Every year, it spends at least $30 billion on capital expenditures to make sure that it has the latest and greatest technology inside those manufacturing facilities. But additionally, in recent months, in recent quarters, Taiwan Semiconductor has an increasing degree of geopolitical risk because of the dispute between itself and China, and because of the geopolitical concerns, because of increasing tariffs, all of which is weighing on Taiwan Semiconductor's business, making it riskier. When we look at it on a forward price to earnings basis, Taiwan Semiconductor trades about a third more cheaply at a forward PE of 16 compared to Broadcom at a forward PE of 24. Bringing it all together to answer which one I think is the better stock to buy right now, it's pretty close. These are both excellent companies. What's going to sway my decision right now is the extra geopolitical risk surrounding Taiwan Semiconductor. That's going to make the difference here in the decision. And so if I had to pick between these two today, I would pick Broadcom as the better semiconductor/AI stock to buy now. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.